As per research, out of total population of around 140 crore people in India, more than 80 crore people are from rural India. And more than 90% people have income below levels of 3 lakh a year. Just take a moment to digest this fact. Today, there are millions of small business vendors that fall into your lower income to middle income category that are not able to grow because of lack of credit facility. While it's very easy for big corporates to take loan worth crores, people at bottom of the pyramid don't even get loans for few thousand rupees. So it's a no-brainer that for India to become a 5 trillion, $10 trillion economy, it has to serve the small vendors and local business owner of the country. The problem is majority of these small business vendors don't have proper documentation or credit history. And these loans are unsecured. So if the business fail, borrower might default on the loan payment. And this is the reason microfinance that basically deals in giving credit facility to small business vendors has always struggled in the past. It's definitely not easy to crack this business. But at the same time, there's immense growth potential in the segment. In fact, like I said, if India has to become 5 trillion, 10 trillion economy, its growth can only happen when the lowest tier of the society would grow. Hence, today I want to discuss the largest microfinance company in India that has not only survived COVID period, but has come out with flying colors. Company name is CreditAccess Grameen. Hey everyone, my name is Sahil and this is my Personal Finance Academy. Welcome to another episode of Next Multibagger series where today we'll cover the fundamentals of CreditAccess Grameen. Although microfinance is one of the most important aspects of financial system with huge demand for microloans, it's very difficult to succeed in this category. But CreditAccess Grameen seems to be doing exceptionally well. In fact, on last Friday, company has announced its Q2 result and the results are simply exceptional. After the result on Monday morning, stock already jumped around 10%. Even DIs have invested in this company big time where the shareholding has consistently increased since last 10 quarter from 9% to now at 15.8%. And look at public holding, it's just 6%. So in this video, we'll first try to understand the challenges in microfinance industry because it's very important to know the key risk before you consider investing your money as microfinance is not that easy. And then we'll try to understand the CreditAccess business model, leadership, financials, key strength, future prospect, key risk and the valuation aspect. But before we begin, just a disclaimer that this video is only for educational purpose. Please do your own research before investing your money. And you can also explore my weekly series where I share one exclusive video per week for serious investors along with my own investment strategy. You can access it on my website or via the join button on YouTube. Alright, let's get started. The biggest challenge in microfinance industry is to manage the risk in terms of bad loan or in other words NPA, that is non-performing asset. So what happens is some companies try to grow their books rapidly by either charging higher interest rate or simply giving loans to customer which is far in excess of what they really need. One of the industry experts mentioned that when customer get more than they actually need, they would either spend the money immediately on something they don't need or put it in a chit fund. And that's not good for the company because in the near term, the growth might look great due to higher loan disbursement, but ultimately this is not sustainable. So always remember that this high growth in financial sector is not the ultimate parameter. It's important to look at the risk management aspect because high growth might result in high NPA and that can crash the business if not managed properly. And this is the biggest risk that retail investors have to understand. And if you can't understand this risk, then you should stay away from the sector. Let me be very honest about it. Moreover, there's another risk of regulation. Any stringent regulation from government or RBI can negatively impact the sector. And that is the reason microfinance is very risky. For instance, in 2010, Andhra Pradesh accounted for nearly 50% of total microfinance loan in India. However, the government passed a regulation that made it impossible for microfinance company to operate. It also resulted in failure of companies like SKS Microfinance that was once the poster boy of microfinance industry. Then a couple of years ago, COVID resulted in big dent in the books of these microfinanciers. During normal time, the write-offs are around 1 to 1.25%, but during COVID, it was almost 6 to 8%. That badly impacted the profitability of microfinance company, which eventually resulted in sharp fall in share price. But at the same time, India is the world's largest microfinance market. So opportunities are immense. Now let's try to understand the business model of CreditAccess that made it the largest microfinance company in India. So the history of CreditAccess dates back to 1999 when Vinatha Reddy came across the idea of microfinance as a powerful tool that could raise people out of poverty in India. She got some grant and started Grameen Kuta that focused on giving credit to women customers in rural area of Karnataka. Eventually, after a series of transactions, it got acquired by a Netherlands-based Asia-focused microfinance company, CreditAccess India, and the name got changed to CreditAccess Grameen. Eventually, it got listed on the Indian market in 2018. Fast forward today, CreditAccess has presence in 16 states, 364 districts with 1,877 branches. Its biggest presence is in Karnataka, Maharashtra and Tamil Nadu, that overall contribute more than 50% of its branch network. Although the company is also growing with 149 branches in MP, 102 branches in Rajasthan, 84 in UP, 148 in Bihar. Clearly, it's expanding its presence and other states' contribution has also increased from 33.4 to 37.3. In terms of borrower, around 65% borrower are from top 3 states, and in terms of gross loan portfolio, more than 70% are from top 3 states. Now here is a very interesting insight about exposure to district. More than 300 districts have exposure of less than 0.5% of gross loan. That's 82.7%. And only 3 districts have 2 to 3% gross loan exposure. None of the districts have more than 3% exposure. Basically, company has nicely distributed its risk with very low exposure to a specific district. The next very important aspect in NBFC sector is the cost of borrowing. It means the interest rate at which the NBFC borrows money, because this money is used to give loan to borrowers. Think of it like raw material cost. Lower this cost of borrowing, NBFC can pass on the loan at lower interest rate. If cost of borrowing is high, NBFC will struggle to make profit and would end up giving loan at much higher interest rate to non-credit worthy people, and that would eventually result in high NPA. CreditAccess latest cost of borrowing is 9.8%. Please note that this is much lower than its peer like Spandana Spooty that has cost of borrowing of more than 12%. Since CreditAccess has the lowest cost of borrowing, it is also the lowest cost lender in the country with a yield of around 21% as compared to competitors that have a yield of 23 to 28%. And lowest cost of borrowing coupled with lowest lending rate makes CreditAccess the strongest microfinance company in India. I've explained this concept when I did a video on top stock in Indian NBFC sector, then also explained while comparing the small finance bank. If you haven't watched those videos, I would highly recommend watching it. Now, as discussed before, microfinance is an unsecured business that involves a certain degree of risk, but it can be effectively managed through robust internal control. So let us try to understand how CreditAccess manages the risk in microfinance industry. So first of all, CreditAccess follows a joint liability group model where the loan is given to a group of 4 or 5 people where group members guarantee each other's loan. Basically, the idea is that when people in rural area take loan in group, they have peer pressure to repay the loan, and that acts as a powerful deterrent against default. You don't want to look bad in your community. Then second, CreditAccess offers differentiated product and service to meet the life cycle need of its customer, providing them with flexibility to choose your suitable loan size, loan tenure, and choice of repayment frequency. This is a unique feature in the microfinance industry across the globe. In fact, more than 50% of their loans have weekly payment cycle. That means that customer connect is stronger. Then third, CreditAccess follow a limit concept where it does not force fit customer to borrow beyond their need. Customer has a credit line that can be tapped into when needed. Fourth, company is very careful expanding its business in district wise with a conscious effort to stay away from areas where the credit culture is poor. Mind you, no district consists more than 3% of its gross loan. Then fifth is lowest cost of borrowing. As discussed before, CreditAccess has the lowest cost of borrowing that makes it operate at much more competitive rate. And sixth, CreditAccess Grameen HR framework is also very robust that ensures a win-win for both company and its employee. For instance, company only hires freshers from geography it's operate in, and in some cases from the very family of its borrower. That has a 5-day week policy that ensures employee coming from the interior get a chance to go back to their home to visit their family. Their HR practice also ensure that in the event of a default at the borrower's end, there is a better understanding of the reason behind the crisis and act as a strong counter risk mechanism. For instance, the best loan officer goes on to become the audit manager or the risk manager. This creates a strong and resilient ecosystem within the organization. The resilience of CreditAccess can be gauged from the fact that over the past 13-14 years, this NBFC has written off around 1900 crore worth of loan, of which around 1500 crore, that is around 78%, has come during the pandemic. Management says that at no point has our capital adequacy fallen below 20% even as we maintain robust return ratio. In a stable market condition, our ROE will still be in the range of 18 to 22%. In fact, I was going through some of the interviews of its leadership and came across a very interesting statement. Its MD says, in a normal time, one will never be able to differentiate between a good and a bad microfinance company. When we build a business, we need to see how these businesses stand in a bad time. That is the true test. I hope you got a good idea about the business model of the company. If you look at the leadership, Mr. Uday Kumar Hebar is the MD of the NBFC. He has been the architect behind the transformational journey of building this CreditAccess Grameen brand as the leading microfinance institution in India. He is a seasoned banker with over 35 years of rich experience. Prior to joining CreditAccess Grameen, he held various leadership positions including head of commercial banking and payment operation at Barclays Bank and successfully stint of over a decade each in Corporation Bank and ICICI Bank. In fact, the entire leadership is highly experienced. You can get all these details on their website. Now let us try to understand the future growth. If you look at the last 7-8 years, microfinance sector has witnessed multiple cycles including demonetization in FY 17-18, NBFC crisis in FY 19, then COVID in FY 21-22. However, company's pre-provision profits have grown at 37% CAGR rate. Its profits have grown at 49% CAGR. Return on asset did fall sharply during COVID, but look at the recovery. Even ROE has recovered brilliantly. In fact, it has recently declared its Q2 of FY24 result and look at the numbers. Its gross loan has grown 36% year on year, disbursement at 13.5%, net interest margin at 13.1%, pre-provision operating profit grown at 68%. Operating after tax has almost doubled year on year. Look at the ROA and ROE. ROA at 5.6%, ROE 24.7%. That's exceptional. Net NP is just 0.24. So top asset quality. Management has given gross loan guidance of 24 to 25%. Net interest margin guidance is improved from 12 to 12.2 to 12.7 to 12.8. Cost to income guidance is reduced and ROE and ROA guidance has improved. So this NBFC numbers are looking exceptional. In the latest annual report, company's MD has mentioned that we are confident of sustainable growth of 20-25% aiming to cross 500 billion gross AUM in the coming 4-5 years. Please note that its FY23 gross AUM is $210 billion. So that's around 2.5 times growth in the next 4-5 years. While there is already a huge demand for credit in microfinance segment, the recent change in RBI rule for microfinance company has expanded the opportunity for companies like CreditAccess Grameen. Now, first of all, these microfinancers can lend to borrowers with a household income of less than 3 lakh. Earlier, this limit was 1.25 lakh in rural and 2 lakh in urban. So basically, the scope for microfinances increased big time. Second, microfinance can now use up to 25% of their balance sheet for loans with collateral, that is non-performing loan. Earlier this was 15%. This places lenders at a huge advantage. Recently, CreditAccess Grameen got featured in the top 5 of the latest Fortune India Next 500 company. So all these factors will result in brilliant growth for microfinance industry. However, let me repeat the risk. Microfinance is a highly cyclical sector with high risk of default. We have seen that in the past. Although currently we have a strong upcycle, but you got to keep this risk of NP in mind before you invest. If you don't understand this, you can totally avoid this sector. Personally, I have invested in some of the NBFCs that I have shared on my weekly series. I also keep a close eye on the key events and result to identify the potential opportunity for my close community of investor. To access these details via exclusive video, you can explore my website. Now let us look at the valuation and shareholding pattern. So company had its IPO in 2018 at around 400 rupee and since then it has been growing to current levels of 1500. At current market price, company commands a price to book of 4.1 and price to earning of 20. Considering the growth prospect, I expect the share price to continue to grow. If you look at the shareholding, nearly 94% stake of the company is with promoters, FIs and DI. Only 6% is with public. Although promoter stake is reducing, but it's completely absorbed by FIs and DIs. That clearly shows the inherent strength in the company. Now let me not stress this video. I hope you got a good idea about the business model of CreditAccess Grameen and its future growth prospect. It takes a lot of time to do such research and I present it to everyone for free. So I hope you will appreciate my effort and like and share this video. For more such informative content, you can subscribe to this channel and click on that bell icon to never miss an update. I'll see you next video. Till then, take care.